Your conference is being recorded.
All right. Well, excellent. Well, thank you everyone for joining me. Hopefully everyone can hear me okay and has access to the web presentation. Today, as you can probably see on your screen, we're going to be rolling out the 401k plan for Long Doggers, Meg O'Malley's, and Hemingway's Tavern. I'm going to give you a basic overview of 401k plans, how they work, why they're important to your retirement savings plan, and then also walk through some specifics about your plan and some of the benefits that are offered within your 401k plan. And then we'll move on and give you a brief overview of the website that you can use to access the 401k, and then leave some time for some questions at the end of the conference as well. So as I mentioned, we'll be rolling out the 401k plan for Meg O'Malley's, Hemingway's Tavern, and Long Doggers. We also have joining us on the line today the financial advisor to the 401k plan, Marcel Pope with LPL Financial and Legacy Investment Consultants, and we'll allow some time at the end for Marcel to introduce himself and discuss some of the services that are available to the participants of the plan here at Paychex as well. So jumping right in and talking about the retirement plan and why it's important, as we walk through this presentation, I think it's very important for everyone to remember that there is no one-size-fits-all for retirement planning. Everything we discussed today should be applied to your personal situation because everyone's picture of retirement is a little bit different. Some folks decide to continue working part-time in retirement or even full-time. Some people dream of traveling the world when they're retired or just spending more and more time with family. So as we discuss some of these concepts and some of the ways that you can save and ensure that you're prepared for that day that hopefully comes where you can no longer have to get up and go to work every day, it's important to apply your personal situation and what you envision being a perfect picture of retirement. So the first question that we always discuss is, how much will I need to save? And it can be a very challenging question for most Americans. Trying to figure out exactly how much money that you need to save for retirement can be a pretty daunting task. And there's a couple of things to keep in mind and some things that can really make this planning process easy for you. But a couple of important things to note. It's always important to remember that you'll probably need more income than you will think in retirement. So again, make sure that you're taking the proper steps to plan for retirement. Again, we're going to talk about some tools that can really make this very easy for you and assist you with this process. But it's also important to remember that your income may be fixed. There really are no do-overs when it comes to retirement planning. The planning and the steps that you take today are really going to lay the groundwork for your retirement income and the level of lifestyle you'll be able to lead. The last thing to consider as well is the effect that inflation has on our money and our income. If you were to look back 20 years ago at a Sears or JCPenney catalog, you'll notice that many of the appliances that we purchase today for many thousands of dollars were significantly cheaper 20 to 30 years ago. A big reason behind that is the effect of inflation. The cost of goods and services over time typically increases. That increase usually is around 3%. So it's always important to remember that if your income and the money that you're saving isn't working for you and isn't growing along with that 3% inflation, you're going to lose purchasing power on the money that you've always earned. So it's really important to make sure that income that you're earning, that you're taking a slice of it every time that you are paid and investing it for your future to ensure that you can continue to live that level of lifestyle that you're used to. And fortunately for the employees of the 3 different restaurants, you now have a tool available through your employer that's going to assist that and make this very, very easy and simple for you to do. So when we talk about retirement savings and, when we talk about that, hopefully that day where you're able to wake up and say that I no longer need to earn an income from an occupation to be able to live comfortably. We hope that everyone gets to that point where they've saved enough money that they can comfortably live off the life savings they've accumulated throughout their working years. And when that day comes that you want to step away from whatever job or occupation you have at that time, you're going to need to replace that income that you're used to. If I'm used to living off of $30,000 to $40,000 a year, when I stop working, chances are I'm probably going to want to continue living off at least 70 to 80% of that income I was used to. Now, you certainly may have some different expenses in retirement. You may have a home that's paid off. You may not have the daily expenses of traveling to and from work. However, as we mentioned early on, there may be some things that you want to accomplish in retirement, whether it's visiting grandchildren or family, traveling, or just generally living out the lifestyle that you're used to. So how do we replace that paycheck that we were so used to getting throughout our entire working years? Well, there's a couple different ways you can supplement that money. The first and easiest one is Social Security. All throughout your working career, you've already been contributing to a retirement plan for yourself. Every time you're paid, you may notice that there are a certain amount of taxes taken out of your paycheck before it hits your bank account. And a portion of those taxes are going into a government-sponsored retirement savings plan for working employees of the country and citizens, Social Security. That benefit, while is a great bonus to your retirement savings, once you get to that retirement age, was never meant to replace all of your income. Social Security was designed to replace no more than 35% of your income, and with the struggles that Social Security has faced lately, that number may drop even further in the future, or you may have to wait longer to even take the benefit. So it's important to understand that while, yes, you certainly do have a nice security blanket waiting for you, as I mentioned, most Americans really would like to live off of 70 to 80% of their income. So knowing that Social Security only is designed to replace around 30 to 35% of my income, how do I replace the rest that I'm used to living off of? Well, there's a couple ways. One is just your regular old savings account that you may or may not have through your traditional banking environment. If you're saving money outside of a retirement plan, those are assets that you may be able to live off of when you get to that retirement age. Other investments. If you're fortunate enough to have other outside investments, hopefully that's something that you can also count on to supplement your retirement, whether it's a rental property or an inheritance that you may come upon throughout your years. But for the majority of Americans, the predominant vehicle that they will generate their retirement income from is going to be their company-sponsored 401k plan. And fortunately, as I mentioned before, you now have this vehicle available to you, help you with this saving program. So what is a 401k plan? I'm sure most of you on the call have heard of a 401k plan before. And quite simply, all a 401k plan is a section of the IRS code that allows you to contribute to your retirement plan directly from your payroll. And in doing so, the IRS is going to give you some tax benefits, which we'll discuss here shortly. When I mentioned the tax benefits, there are two different ways an employee can contribute their money to the plan. There is the pre-tax contribution method and the Roth contribution method. These options are available to all employees, and you're even able to do a mixture of the two. Now, I'm going to start with pre-tax contributions and what some of the benefits are of pre-tax.
Hey, Joe,
I want you to think of your, yes.
I don't know, is the slide supposed to be moving on its own at this
Yes.
point, or are you taking us
Yes.
through the slides, or is that going to be at a different point?
That should be moving for you on your screen. You might want to refresh your browser if it's not moving. You should be seeing the pre-tax take-home advantage up on the screen right now, Tony.
Yeah. Makes a big difference. Yeah. Okay.
Do you see that?
Yep.
Perfect. So, good news is you didn't really miss a whole bunch on the slides if they weren't coming up. This is the first one that you'll want to see. So when I back up here one step, I want to talk a little bit about the two different ways that you can contribute the money from your paycheck into the plan. The pre-tax contribution route is probably what most of you commonly associate saving in a retirement plan. Pre-tax essentially lets you set aside money from your paycheck before the IRS reaches in and takes your federal taxes out. So as it stands right now, if you imagine your paycheck, every time you're paid, running through a toll booth, and that toll booth is the IRS, they're going to go ahead and reach in and take the money out that's required every time you're paid, and then whatever is left over is what hits your bank account. When you contribute on a pre-tax basis, essentially what this allows you to do is to set aside money before your paycheck goes through the toll booth. So in this example, if I'm contributing pre-tax and I'd like to contribute $50 of my pay, that $50 is removed from my paycheck. The taxes are then applied to what's left after the $50 is removed, and I end up paying less taxes out of my paycheck each pay period. That $50 is then placed into my retirement account, and I'm allowed to invest that. I will not owe taxes all throughout the time I have that money invested. And then when I retire and start to take income out of the plan, I will then pay my taxes. So pre-tax in a nutshell is going to essentially save you on taxes today and defer the payment on those taxes until you retire. So there's no way to completely avoid paying taxes on your contributions. However, you do get the benefit of reducing your taxable income today in exchange for paying the taxes at a later date. Okay? This next slide is going to give you a little bit of an example of what I was talking about in straight plain numbers. This example is going to show you the same employee who is going to save $1,750 annually. So on the left-hand side, as we walk down this chart, this is going to be an employee who contributes $1,750 to, let's just say, a traditional bank savings account. Their paycheck as it runs through the toll booth we referenced earlier is completely taxable. This employee makes $35,000 a year. The entire $35,000 is subject to federal income tax, so they pay right around $4,789. Once that money hits their bank account, they then take out their $1,750 that they want to contribute to their savings account. What they're left with is $25,783. Now, where the pre-tax advantage comes in, we're going to take that exact same employee, and instead of waiting till after the money hits my bank account, after it's been paid through payroll, we're going to set aside that $1,750 pre-tax. You'll notice the main difference between the taxable pay of $35,000 to $33,250. This takes place, again, because that employee is contributed on a pre-tax basis. The next line I want you to go down and see the difference of is that federal income tax line. This particular example, the employee is now only paying $4,526 of their take-home pay in taxes, and their net pay after all that is said and done is $26,046. So by contributing pre-tax, again, you're saving on taxes today, you're reducing what your income level shows to the IRS in exchange for having to pay the taxes at a later date when you retire. So now switching gears, we're going to talk about the other option. The other option to contribute to your plan is the Roth contribution. Some of you may have heard this concept outside of 401k plans before. Maybe you have a Roth IRA or you've heard someone mention the term before. The great thing about our plan is that if you like both of these concepts as we talk about them, as I mentioned prior, you do have the ability to split up your contribution and contribute both ways. But for the time being, we're going to focus on the Roth contribution. So the Roth contribution is similar to the pre-tax. However, the main difference is that I am going to pay the taxes today. That last example I just showed you where we are setting aside money pre-tax, the exact opposite is true of Roth. Roth, I am not going to take a pre-tax deduction. I'm going to take it out after I pay my taxes. Some of you may be wondering, well, why would I want to do that when the pre-tax option is available? Isn't it better to save on taxes today? Maybe. However, the Roth option essentially does the exact opposite of pre-tax. I'm going to pay the taxes today so that when I retire, my account can be a majority tax-free. So again, the major difference between pre-tax and Roth, pre-tax is not paying the taxes today to pay them later, whereas the Roth is I would like to pay the taxes today so that I don't have to pay them later. That is the major difference. There is no income limitation on the Roth option. Anyone is free to contribute to the Roth account and the pre-tax. And again, if you have further questions on that, we'll discuss near the end some of the resources that you have available that can help kind of counsel you through which option is best for your situation. So as we talk about contributing to the plan, the great news is that your 401k plan is completely participant directed. You get to decide how much you want to invest, and you get to decide exactly how it is invested. And we've even included some features for some of you that may not feel comfortable selecting investments, but do want to contribute to the plan and ensure that you're in an appropriate place. So again, you are completely in control. You get to decide exactly how much you contribute from your paycheck. You have the ability to change that at any time. So unlike maybe a health insurance type deduction that you may see or a other benefit deduction that you may have had in the past, 401k deductions are able to be started, stopped, or modified at any time. So it gives you a lot of flexibility when it comes to planning for your retirement. The next chart shows you how possible it is for someone at a various age bracket to really achieve a significant retirement milestone. This chart just gives you an idea that someone at the age of 20 saving $200 a month essentially ends up becoming a millionaire at age 65 due to the length of time that they've been investing. And as you see, as they walk down the chart here, that shows, how possible it is for someone at any age to become a millionaire in retirement. So again, saving in this plan is not meant to be a situation where you're looking to make a quick profit. Your retirement plan at your workplace is really meant to be a long-term, stable investment that is going to be there for your retirement needs. So let's jump into some of the plan specifics. Your plan in particular is a very generous plan. But when we talk through the eligibility rules, who is eligible for the plan? Individuals who are 21 years of age who have worked for Long Daughters, Hemingways, or Meg O'Malley's for 12 consecutive months and have completed 1,000 hours of service are eligible. Once you've achieved those eligibility requirements, the age 21, the 12 months of consecutive service, and 1,000 hours, at that point, you have become eligible. You have reached all three milestones. As soon as you reach those milestones, you will be eligible to enter the plan on January 1st or July 1st, whichever is sooner. Now, I'm sure there are folks on the call that are not entirely sure of how many hours or how long exactly they have worked or whether or not they're eligible. The great news is that we've been tracking that information, and you'll have the ability to log onto our website and see exactly where you stand from an eligibility standpoint. So if you're not sure whether or not you have satisfied these requirements, we can actually track that and find that for you once you register for the web, which I will show you shortly. So how much can I contribute? Yes.
Joe, hold on one second.
Yes.
Just to clarify, the 1,000 hours worked is in one calendar year, right?
That's correct, yes.
Not collective, it's one calendar year.
That's correct, yes. So you do need to complete those 1,000 hours within one calendar year to be considered a full-time eligible employee for the plan. That is correct.
Thank you.
And the 1,000 hours averages to hit the 1,000-hour mark. We're talking a 20-hour-a-week employee. Is that correct?
Essentially, yes. Yep. Good question. So once I've achieved those eligibility requirements, how much can I contribute? The great news is there's no minimum. You can contribute as little as 1% of your pay. For 2018, there are some maximums involved. So if you are someone that really is into retirement savings or has some catching up to do, the IRS does cap what you can contribute on a tax-deferred basis. This applies to whether you're doing pre-tax or Roth. It is a total of the two buckets that you're able to contribute into. For 2018, the maximums have been increased to $18,000 for any employee age 49 and under. If you are age 50 or over, you can contribute an additional $6,000, bringing the total to $24,500. So again, those are maximums. You are not required to contribute to the maximum. You can contribute as little as 1% of your pay, and you do have the ability to change, increase, decrease, modify, stop, or start your contribution at any time once you've become eligible. So moving on, the next piece. Does the plan offer a matching contribution? The great news is yes. Your plan offers a very generous matching contribution. Essentially how your matching structure works is that for every dollar you contribute up to 4% of your pay, you will receive a 50% match. So for an employee contributing 1% of my pay, I would receive half of whatever I contributed to my plan. If I contribute 2% to the plan, I will receive an additional 0.5%, bringing my total employer contribution to 1%. If I contribute another 3% of my pay, okay, I move my contribution up to 3% of my total pay. At this point, I will receive a 1.5% contribution total from the employer. And then if I go all the way up to 4% of my pay, I will receive an additional 0.5% contributed by my employer, totaling 2%. Now, at this point, as an employee, I can contribute above and beyond the 4%. Anything above and beyond the 4% of my pay will no longer be matched, but you do have the ability to contribute more of your own pay. So again, in order to essentially not leave any employer matching money on the table, you'll need to be contributing at least 4% of your pay. You're not required to contribute the full 4%, and any percent below that will be subject to the matching rules that are applied to the plan. If you're curious exactly how much match you get at a certain percentage of your pay, when you log onto the website and enroll for the first time, as you select your deduction, we'll go ahead and calculate that for you automatically, and we will let you know if you are missing out on any of the company match. Okay. So moving on, who owns the money in the plan? The great news is that 100% of your money that you contribute from your paycheck always belongs to you. No matter what the circumstances, if you're terminated, if you leave the company, the contributions you make from your pay are always 100% owned by you. If you decide to leave the company or are terminated in the future, you do have the ability to take your funds and roll them into an individual IRA, or if your new employer happens to have a retirement plan, you would have the ability to roll that money into their existing 401k. Switching gears and talking about the employer matching contribution. The employer matching contribution is subject to a vesting schedule. The vesting schedule is referred to as a 3-year cliff vesting schedule. Essentially, what a 3-year vesting schedule means is that once I've completed my 3rd full year of service, at that point, all of my contributions are 100% vested and anything contributed to my account going forward. The great news is if you've been an employee of the company for many years, the years that you have worked prior to the plan starting will credit towards these required years of vesting. So again, once you've completed your 3 full years of service and you enter day 1 of your 4th year of employment, at that point, you will become 100% vested in the employer matching contribution. If you participate in the plan and you leave before that vesting schedule takes effect for you as a participant, all of the money that you contributed from your pay is still 100% owned by you, but the employer matching contribution will most likely be subject to forfeit back to the plan. Okay. Moving on. If this is your first jump into a retirement plan, you may be a little bit concerned with how you can access your money. It can be a scary thought parting with money from your paycheck and putting it into a long-term investment account for the first time. The great news is 401k plans allow for some emergency features. If you get into a situation where you are crunched for cash or you have an emergency, there are multiple ways you can access your account. Your plan allows for a 401k loan. A 401k loan would allow you to access your retirement funds that you were vested in. Again, so you must be vested in the funds to be able to access them. Your money being 100% always vested would always be accessible to you. When you go to request a loan, there are some IRS regulations surrounding the loans. You are only allowed to borrow up to half of your account. So if 10 years down the road, I've got $50,000 in my account, I would be allowed to borrow only $25,000. Now fast forward another 30 years, and let's say I have $200,000 in my 401k account. At that point, my account will be subject to the second limit, which is a $50,000 cap on loans. So if I have a $200,000 account, even though 50% of my account is $100,000, I would still be subject to the cap of $50,000, meaning I would only be allowed to borrow $50,000 from my account. So loans, as I'm sure Marcel with LPL and would second, really are meant to be a emergency last line of defense. If you take money from your 401k plan, keep in mind that it is no longer invested in the plan and is no longer growing for your long-term benefit. But as I mentioned, in case of emergency, it is a place where you can access the funds. Just like a traditional loan, you're required to begin paying that back immediately from payroll, and we would set that up for you. And you are required to pay back a personal loan, which you can take for any reason within 5 years. If you decide to leave the company or you are terminated, any outstanding loans must be paid back within 60 days of termination. Otherwise, they'll be distributed to you as income, and you would face a 10% penalty on an early retirement withdrawal. So again, really loans are not meant to be a piggy bank. They're really meant to be as a safety net for an employee that may get themselves into a sticky situation and needs some emergency funding. Again, you do have the ability to take that personal loan. You do pay interest. You pay that back to yourself. The interest rate is prime +1. So again, if you get into a situation where it comes down to putting a large emergency expense on a credit card versus tapping into your 401k, the 401k can be an advantageous place to access the funds. There is one other loan provision available as well. I mentioned a personal loan must be paid back over 5 years. There is the opportunity to take a primary residence real estate loan from your 401k as well. Everything we just mentioned, from the limits to the penalties to the interest rate, all applies to a real estate loan. However, there is one significant difference. Instead of having to pay that back over 5 years, you would have the ability to pay that back over 10 years. So again, two different ways you can access your money in the plan. And if you do want to explore one of those loan options, you can go directly to the Paychex website. We will calculate exactly how much is legally available for you, and you can set up exactly how long you want to borrow, how quickly you'd like to pay that back, and we'll take care of setting up the payment through a payroll deduction for you. So moving into the plan itself and how to get yourself set up in the plan, one of the things we always like to mention is to no matter what you're comfortable with putting in, the key importance of a 401k plan is to start early. Time is the one piece that you cannot get back, as you say, for retirement, and it is your most powerful weapon in retirement savings. No matter how little you contribute to the plan, the earlier the earlier you start, the better. That allows those dollars more time to grow and compound on top of each other and provide for you a fruitful retirement. So how do I get involved in the plan if I'm interested? Well, it's very easy. Your plan is administered through Paychex Retirement Services, who also is your payroll provider, and we provide a single sign-on technology for our participants in our plans to enter the 401k. If you've already registered for the Paychex Flex website, where you have the ability to view not only your pay stubs, but your W-2 information and tax information, you will now notice that there's a retirement services icon available for you, which we'll walk through in a moment. If you have not yet registered for your Paychex Flex account, that is definitely something you'll want to do, and you can simply head over to paychexflex.com, or a simple Google search for Paychex 401k login will get you where you need to go. Once you've created your account, you not only can manage your account from the web, but you will also have access to our excellent mobile app, which will allow you to not only change how much you're putting in the 401k plan each pay period, but will allow you to change your investment structure and also allow you to view any existing loans you may have, as well as check the balances of your plan. There's also some very useful call for help buttons at the bottom of the app, so if you have questions as you're making changes or getting enrolled for the first time, you can reach directly out to Paychex, and we will assist you telephonically on getting whatever it is you need done on the mobile app or website. So with that being said, I'm going to pop into a brief walkthrough of the enrollment process and then give you an overview of the 401k website that is now available on your Paychex Flex tab. Once you've registered for that plan, or for the Paychex Flex account, when you log in, as I mentioned, you will see that retirement services icon on the left-hand side of your screen. Once you click into that tab, you'll be faced with a dashboard that will have some information on it. And in the top right corner, as you can see highlighted on your screen in front of you, you'll notice there's a Take Action button. Right there, it will prompt you to enroll in the 401k plan. If you click on that button, we're going to walk you through step by step how to get started in the plan for the first time. Once you click that Enroll Now button, you'll be faced with a couple of screens. You'll be able to view all your required disclosures, and you can sign up for electronic delivery of disclosures in the future as well. Once I've gotten past that stage, next I'll be able to start selecting how I want to contribute money to my plan. So you'll notice here that on the first page, you're able to put in your pre-tax or your Roth contribution or your mixture of both. A common question that we receive when it comes to pre-tax and Roth is that, what if I really like the pre-tax and Roth option and I decide I want to contribute 2% of my pay to Roth and 2% pre-tax? Because I'm not contributing 4% to either one of them, am I still eligible for the full match? The answer is yes. The match is applied to your total contribution. So no matter how you split up the contribution, whether it's half pre-tax, half Roth, or all Roth, or all pre-tax, as long as you're contributing the full 4% of your pay, you will receive that full match. And again, if you're not certain, as you walk down the contributions page at the very bottom, it will total up that match and will inform you if you are missing any of the employer match. The next step will be to select your investments. Now, there's a couple of really great features built into the plan, which we'll discuss momentarily. But the great thing for an employee who is not comfortable choosing investments, there are a couple of automatic features built into your plan that really assist an employee with getting started in the plan for the first time. If you know you want to contribute a certain amount of your pay to the retirement plan, but you're not really certain how to pick investments that are appropriate for your age group, one of the great things about the plan that is offered through Paychex is that your plan will have something called a target date retirement fund built into it. What a target date retirement fund does is essentially assigns a retirement year to each one of the funds offered. As you log into the website, you'll notice that there are a handful of target date investments in your plan, and each of them will have a year after that. The years increase in 5-year increments, such as the 2020 fund, the 2025 fund, the 2030 fund, and so on and so forth. And what these funds are designed to do are to really make retirement savings easy and put them on autopilot for participants. Target date funds are by far and away the most popular investment selection for American workers participating in retirement plans. Essentially, how target date funds work is whatever year is selected, that investment will manage itself according to that year they're targeting your retirement in. So to give you an example, as a 30-year-old employee targeting a 2055 retirement, if I select the 2055 fund, my money will be invested somewhat aggressively, being this far from 2055. And then as I get closer to the year I want to retire, which is 2055, my investments will automatically become more and more conservative as I get closer to my retirement age. So these funds are selected as the default option for participants who do not feel comfortable choosing an investment. So in walking through this process, if I choose how much I want to put in the plan out of my paycheck and I'm not comfortable picking an investment, I can leave this section blank and move on. What will happen is my money will automatically be placed into the target date appropriate for the date of birth that you enter into the system when you enroll. Right? If you are comfortable picking investments, you certainly have the ability to click through and select all the different percentages that you want to apply to each fund. And if this is something that you want to do, but you want a little bit of assistance, we're going to talk in a moment about some of the additional tools you have available to you. So once you've done that step, you're going to get a summary of your contribution. We'll show you exactly what will be coming out of your pay. You can go ahead and review and submit that, and at that point, you have the ability to enter the plan. The next time your paycheck is run, you will have a contribution loaded into the 401k, and you do have the ability to not only manage the 401k plan going forward by your mobile device, but you also have the ability to make changes by calling us and also accessing us on the web via any of the 401k links that we provide, whether it's Paychex Flex or benefits.paychex.com. There are a lot of different ways you can get to the 401k site and log in. So before I switch over to the website demo, I want to briefly introduce Marcel Pope and his team, who are the financial advisors to the plan to provide not only services to your employer in selecting the menu of investments that are provided to you employees, but also participant education and advice. So I'm going to turn it over to Marcel to say a few words before we switch over to the brief demonstration of the web. Take it away, Marcel.
Thank you, Joe, and great job, by the way, of explaining everything. Yes, and I have an equal counterpart with me, Diana Jabbour. We're 100% equals, are both available to any and everyone who may need help with the plan and even looking over the investments. And through our company, LPL, as far as I know, we have the largest infrastructure up for these types of plans to help assist individuals into preparing for retirement. We have a dedicated website called Worksite Financial Solutions. Hey, Joe, was there a link to that site through Paychex?
Yes, there is going to be a link, and I will show that on the web demo where you can access that.
There's plenty of resources, and this can get cumbersome sometimes, but it's really not. We try to make it real easy through that Worksite Financial Solution. But Diana and I are always available. Even things like, should I lease my car or buy it? You are free. Feel free to call us. There's no charge whatsoever. We'll make time for you to come out to our office out here in Indian Harbor Beach. So we're always available for anybody who needs help on any level, and there's never a charge for that.
Great.
Yeah,
thank you, Marcel.
Thank you, Joe.
And I certainly encourage participants to take advantage of that. Marcel's firm and group are excellent. They'd love to provide that education, and it does not necessarily have to be 401k related. We really want to look at your financial picture in a holistic view. So hopefully everyone can see the Paychex Flex login screen here. This would be the landing page for you to log into your Paychex account. Once you created that registration, you'll notice there's a sign up link right there at the bottom that will get you started. But as I create my account and I'm able to log in, and one of the things I want to show you is the landing page. As you'll notice, there's quite a bit of information on the screen. You may or may not have access to all of these different pieces on the left-hand side, but however, you will have access to the retirement. The main landing page of Paychex Flex is going to take you to this view. You'll notice right off the bat, I have check stubs available to view. So after you sign up for your 401k and you just want to see how that first deduction affected your paycheck, you can click right into that and view that. You also have the ability to get your W-2s sooner than they arrive in the mail at year end, right here via the web portal. But you'll notice there's a shortcut to the retirement services as well. So when I click on that shortcut, this is going to take me to a quick view. So this is not the full Paychex 401k website. However, this will give you quick access to make changes or view information on the fly. For those of you that have the Paychex mobile app already, this may look a little familiar because this right window is the exact interface that you have on the mobile app. You'll notice right there on the summary screen, I can see my current balance, I can see my performance, I can see exactly which investments my money is sitting in at the current moment. But you'll also notice a contributions and investments tab up top as well. By clicking those tabs, you have the ability to not only modify your contribution right from this quick tab, but you can also modify your investment mix as well if you're actively managing your funds. You also have the ability to view any outstanding loans that you have on the plan. So again, that's your quick access. If you want to dive in and really get into the retirement services page, which has quite a bit more information, you'll go ahead on the left-hand side and you'll click that piggy bank icon. One thing I want to share with everyone on the call here today is that while this webpage is going to remain operational for the next quarter or so, this page is undergoing a makeover where we're going to add enhanced functionality. We're going to provide you not only what your balance is in your retirement account, but we're also going to provide you a projection of what that balance means in monthly income at your desired retirement age. So instead of logging into a web page and seeing that you have $150,000, we're going to go ahead and translate that to you and what that would mean in monthly income at that retirement age that you decide you want to input. That's going to be a very helpful tool as employees begin to contribute to the plan to help them really understand what this means for your level of living and retirement. But for the time being, you do have access to a lot of these tools already through the Paychex website. So you'll notice up top there are quite a few tabs and different functions that are available. But like all the pages on Paychex, we do have a quick landing spot for you with some quick and easy to use tools. As I mentioned, your balance and rate of return are listed right there. Also that breakdown of your investments and what you're invested in currently. Again, if you're one of the folks that are going to automatically go into the target date fund, you'll see one investment listed here. But I want to point out on the right-hand side, we've already seen this window once when we first enrolled. You'll notice for this particular demonstration, this employee is already enrolled in the plan. So that enroll in your 401k icon is no longer there. There are 3 options here to make changes. So what do they mean? Change future investments and change current investments. What's the difference between those two? Well, easy way to understand it is changing future investments. What does that mean? Well, that means that if I've been saving in the plan, and let's just say I've got a balance of $5,000 in my target date retirement fund, but I decide that next paycheck, I would like my next contribution to go into a different investment option. I don't want to touch the money that I have in my current investment. I just want my future investments to go elsewhere. That's when I would select change future investments. Now, if the alternative is true, and I want to change that target date fund that I have, I want to change not only my current investments, but my future investments as well. Well, then I would change on current investments. So again, the major difference, changing current investments moves the existing money that you have in the plan to a new investment. Changing future investments does not affect any of your existing assets in the plan. It will only affect your future contributions. You'll notice right below that, you have the ability to change your payroll deduction as well. Now, while this is a generalized demonstration that doesn't have everything that you have in your plan, when you log in, you will notice above this Take Action window, you're going to have another button. And this was what Marcel had referenced earlier. There's going to be a button that will take you to the LPL Worksite Solutions tool that is available through Marcel's firm. This tool is excellent. It is a great resource for any employee that really wants to take the bull by the horns and really get their hands around their retirement savings and what they need to be doing to reach their goals. The Worksite Financial Solutions tool is going to allow you to not only tie in much more information about your personal situation, whether it's your mortgage on your home, if you happen to own rental properties, if you have a spouse who works elsewhere that maybe works and has a pension or a 403B plan through a school, you can bring all of that information together so that as you make your decisions on what you want to contribute to your retirement plan, the recommendations that that tool is going to make is going to take into account everything else about your personal situation. So when you were looking for that personalized advice, not only do you have access to Marcel and his team in person, but you also have access to their virtual advisory tool, that Worksite Financial Solutions. If you have an existing retirement plan that you want to consolidate into this plan, that tool will also assist you with bringing that old retirement account into the new plan through your employer. I can't understate enough how excellent the tools in that service are, and if this is something that you're interested in, I definitely encourage you to click on that link and take a tour of that service, as there are various options in there, not only to help you plan, but to also help you manage your investments as well. You can choose to allow LPL and Marcel's group to manage those investments automatically for you if you're not someone who's comfortable with managing them on an ongoing basis. So just moving on from some of the main stuff on the dashboard here, you'll notice there's some quick links to some tools down below. Not only do we have those tools for allocating your contributions, but we also have a net pay calculator. The net pay calculator is excellent. It's a really helpful tool for helping you kind of understand what's going to happen to my paycheck when I start contributing. You can click on that net pay calculator and type in exactly what your income level is and what you're paid, and you can decide how much you want to contribute to the plan And this calculator will go ahead and calculate exactly how much money will come out of your paycheck each period. Down below that as well, there's a retirement calculator that helps you, in addition to the worksite financial tools, that it will help you project out exactly how much money you'll have in retirement if you start in the plan today. So some very useful tools in there. You'll notice as I click through some of these tabs, a lot of the tools we've already seen on the main dashboard are going to be available under these tabs as well, whether it's changing my deduction, changing my investments. But I also have the ability to change my email address. I can view any required disclosures or request statements. You name it, it's all here. You also have the ability to view all the available investment options in the plan, and you're able to click on each of them, and it's going to bring you to a quick fact sheet summary of each of the investments. So if you're invested in the target date fund appropriate for your date of birth, and you're curious just to see how that fund has performed over the last 5, 10, 15 years, you can click directly on that fund that you're participating in, and it will bring you that information. So as I move down, loans, right here is where you'd have the ability to go in and select whether or not you wanted to take a loan out, and you can calculate exactly how long you want to pay that back over, and just like everything else on the website, we'll calculate exactly what that payroll deduction would be to repay that loan. So again, you're going to go directly to Paychex to request a loan on the plan.
The way to
As I mentioned, sorry? As I mentioned before, there is the ability to roll money into the plan from a previous employer. So if you have an old 401k or you have an IRA individually that you're looking at consolidating, you can bring those funds into the plan together with your current savings. And if you need to follow the instructions, you'll click on either the English or Spanish version and follow those instructions on exactly how to contact your prior provider and tell them how to get the money into the plan. We'll give you written instructions that you can provide to whoever your previous retirement plan provider is, as well as instructions on where to send your funds. Same thing goes if you leave the company. If you happen to move on and you want to roll your money out of the plan, you still will have access to the retirement services portion of this website. Obviously, at that point, you will no longer be able to make contributions, but you will have the ability to view your account and request that rollover. There's also beneficiary information in here as well that you can print out and return to make sure that you have an updated beneficiary on the plan. Last stop on the website is the tools and learning page. Again, a lot of the tools we've already seen are listed here, as well as some additional information, just some basic information on how 401ks work. If you're curious to learn more about Roth 401k, it's here as well. We've also even got a Roth 401k analysis tool that you can walk through, which will help you decide whether Roth contributions are right for you or not. There's also some papers here on just life and work events. If you're going through a divorce or have a disability or a job change and you're curious of how that's going to affect your 401k, all the information you could possibly want to read up on is listed in here. This section is frequently augmented and new calculators and tools are added all the time. So certainly log in and check and mess around with some of these tools because they are very, very helpful when it comes to planning for your retirement. So that is the end of the tour of the website, and I am close to wrapping up, but I wanted to leave some time for some questions, if there are any on the call.
So Joe, you and I have been through some of this, but I know there's probably a question or two out there that people aren't thinking about yet. So I'll kick off at least one question. I know I'm sure there's managers out there and assistant managers and team leaders. These guys all get bonuses, quarterly bonuses. So if I'm getting a quarterly bonus and I've chosen to put 6% of my salary in, would those bonuses be eligible for that?
Yes, that's correct. So the great thing is, as I mentioned earlier, you do have the ability to modify your contributions at any time. So yes, your bonuses are subject to the plan. However, if you are one of those folks that prefers to have your bonus paid to you in whole, you do have the ability to log on the website, call us, or just pop into your mobile app, and you can reduce down your contribution for that pay period that you receive that bonus. So again, you can either stop it altogether so that you receive the full bonus, or you can reduce it or increase it, whatever it is that you're looking to do. I certainly recommend doing that 48 hours prior to being paid. General rule of thumb is that if you've made those changes on Monday or Tuesday before you are paid, that those changes will take effect before you're paid. It's a good question, Tony.
Joe, you had mentioned that there's a spot in there to fill out your beneficiary.
Yes.
Okay, is that something they're going to do online, or do they need to print that out and send that in to me?
Great question. So beneficiary forms are required to be retained by the employee as well as the employer. So make sure if you fill that out, the form is available. Make a copy for your files and also return one to your employer. Very important to do because when it comes to 401k beneficiaries, if down the road we hope this is not the case, but if you guys decide to change 401k vendors, that information does not transfer between vendors. So whatever you fill out when you enroll in the plan today would be in effect no matter who is administering the 401k. So ensure that you're keeping a copy for your files and that you're having a signed copy written into whatever files you keep for, whether you have an insurance file or just a personal file. But also a best practice would be to return that to your employer. Important thing to remember is that if something tragic were to happen to one of the participants in the plan, your loved ones and your family members that you would leave behind would most likely not know who your 401k provider is. The first place that most of those folks do is they call the former employer. So ensure that you return a copy to your employer so they have that information that they can reference, but also keep a copy for your files. And no matter where your 401k plan goes, the last beneficiary form that you filled out and signed and retained will be your beneficiary on file. If you don't fill one out, your 401k assets would essentially follow whatever will you have provided. And if you don't have a will, it would follow just the state laws that you live in terms of where the assets would go. One thing I always like to point out is that when you're filling out a beneficiary form in the state of Florida, if you are married, you are required to name your spouse, unless they sign off that they don't want your assets if you pass away. Now, I've yet to see one of those forms come in, but that is a possibility, especially if you are remarried and have children with a previous spouse. That may be something that you want to look at. But again, state of Florida, you are required to name your spouse as a beneficiary unless you have their signature authorizing you to name someone other than your spouse. You also have the ability to name secondary beneficiaries as well. So in the event your primary beneficiary is not available to receive the funds or they predecease you, you do have the ability to name a secondary beneficiary that those assets would go to. And you also have the ability to split that up amongst multiple people as well. So it does not have to go to one beneficiary. Good question, Mandy. Any other questions on the plan or the website or some of the tools that are involved as well? Okay, well, great. Well, you have another one, Tony?
Yep. I was trying to give a little pause there because I actually have a couple more.
Yeah, no problem.
See if anyone else had any more. So I'm not sure. I might have missed it, but in your tour of the Paychex Flex website, did you show where I can figure out if I'm actually eligible?
Yeah, so when you log in, Tony, on this page itself, that main dashboard, when you click Retirement Services and you click that Enroll Now button up top, right there it's going to tell you, once you click that, whether or not you're eligible. So if you're one of those folks that's not sure where you're at right now, create your account. Go to that main landing page and go ahead and click on the Retirement Services icon down here in the bottom right. So right here on the left-hand panel, okay? Once you click in there, the first message that you see will direct you whether or not you are eligible for the plan. And if you're not, it will project out when you will be eligible based on the information we have in the system. Does that answer your question, Tony?
It does. I just want to make sure that was clear for anyone on.
Yeah, and you all have access to the Retirement Services page already as well. So that is something you can access today after the meeting. If you are having trouble creating your account, you're not going to want to reach out to your employer. Reach out directly to Paychex so that we can ensure we have all of your information 100% accurate before you register your account. We do take the security of these accounts pretty seriously. So, again, if there is some information we're missing, we may require you to give us a call to finalize the setup of the account.
So my next question is similar to the manager's bonus. This is about if I'm a server at Long Doggers and or Hemingway's or Meg's, and I want to maximize my employer contributions, right? So I want to put 4% of my salary in. Can I do my tips? Do my claimed tips? Can I use that as part of my total salary to maximize my 4% contribution so that the employer matches 2%, including my tip salary?
That's exactly correct. I mean, exactly how you explained that. Their tips, their claim tips are included in their W-2 pay. So as long as they're included in their W-2 pay, they can include those for that calculation. So we'll look at their gross wages. That's absolutely correct how you explain that. So if you have a question from a server, are my tips included when we talk about my 4% contribution and the 2% match? The answer is yes.
That's my last question. So if anyone else has any other questions, get it in now. And then, of course, we can always ask some more later. But if you've got one now or you got something you're confused about, please ask.
And you certainly have no shortage of resources as well. If it's a question that you just can't quite think of right now, you can always call Paychex directly. We can answer about 95% of your questions. The only things that Paychex can't really help you with is personally recommending and picking your investments, but everything else from, how does our plan work? How do I do this? What type of wages can I contribute? All of that we can answer for you on the participant help contact number. But if you do have questions regarding your investments or what's appropriate for you, you have Marcel's firm available as well, their direct contact. So depending on what kind of question you have, if it's investment related, that's a question you want to direct towards Marcel's firm, or utilize some of the tools that are associated with your plan. And we do have some help numbers associated through Marcel's firm as well that are available. But if you have a question on anything other than that, you certainly can reach directly out to Paychex. The participant retirement services line that's listed on your website will take you directly to that department. We'll be able to pull up your account and your plan and answer any questions that you may have.
Okay. Well, thank you, Joe. Thank you, Marcel.
Thank you.
Yeah, thank you. We appreciate everyone's time and attention. Thank you again for listening in. And like I said, I encourage everyone to get on the website and register. And if you're having issues registering, go ahead and give us a call. And, again, thanks again for your time, and Tony and Mandy for putting everything together. And everyone else, have a great day.
Great. Great job, Joe. Thank you very much.
Thank you, Joe.
The leader has disconnected. The conference will be terminated.